Inside the Prime Minister's office, Mark Carney huddled for an hour with the Canadian CEOs of GM, Ford, Stellantis, and the Canadian Vehicle Manufacturers Association. When it was done, François-Philippe Champagne said little about the discussion.
We had a very good meeting talking about the industry, and we've been very, very clear. We're always going to be there to support the workers and the industry.
He refused to say whether or not the federal government will keep the electric vehicle mandate. By next year, 20% of new passenger vehicles sold in Canada must be either battery-powered or hybrid. It was something car makers clearly wanted to discuss ahead of the meeting.
EV mandate itself is not sustainable. The targets that have been established cannot be met, and that will be part of the discussion.
Those in the industry say EVs currently account for 9% of total sales. And if they fall short, Flavio Volpe says it's the car companies that pay.
And to sell regular combustion units, they've got to buy a credit from some company that's earned it, or spend $20,000 per unit on charging infrastructure.
On top of that, those same car companies continue to deal with 25% tariffs from the U.S. Now, there is a carve-out for components that are built in America through the integrated supply chain. Still, Canadian auto exports in the U.S. fell by 23% in April.
They make 6 or 7% a year of profit. If there is a tariff in for 5, 10, 25%, it makes those operations untenable.
According to a readout from the Prime Minister's office, the meeting also looked at ways to make Canada's auto sector more sustainable and competitive in the face of shifting trading relationships, something that could be more urgent if Canada isn't able to strike a trade deal with the U.S. in the next 19 days.